Hey there, Singaporean investors. Are you tired plowing through countless news articles and piecing together what's actually important for your portfolio? Or maybe you're just wondering what today's market moves really mean for your investments. Well, you're in the right place. Welcome to the Investing Iguanas Daily SGX Market Digest for Monday, July 28th, 2025. I'm Iggy, and in the next few minutes, I'll cut through the noise and bring you the essential updates, the smart insights, and of course, my unique take on what happened today on the Singapore Exchange and what it all means for your money. No jargon, no fluff, just real, actionable intelligence tailored for Singaporean retail investors. And just a little reminder, the Investing Iguana recently ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We've passed the 1 million mark for reads, and you've held power over 900 videos and 500,000 watch hours. Talking markets and strategies isn't just my day job, it's my passion. On this show, you also get the broader context, not just the ticker tape, with a spotlight on both regional and worldwide trends so you can see the whole picture, not just the local snapshot. Let's get straight to what mattered for SGX investors on this Monday. The Straits Times Index, or STI, finished the day at 4,161.1. That's a mild dip of 0.3% compared to the previous session, but let's keep things in perspective. The index has still gained a solid 7.5% for the month and an impressive 12.5% since the start of the year. So despite today's minor pullback, our market's underlying strength is still shining through. Across Asia, the picture was mixed. Hong Kong's Hang Seng Index fell by about 1%, and the Shanghai Composite lost around 0.3%. Meanwhile, major U.S. markets closed the week with fresh record highs, underscoring just how much global sentiment can influence our local trades. Now let's take a closer look at some of the most important stories and movers on the SGX. First up, let's talk about OCBC. This blue chip bank, long a pillar of Singapore's financial sector, was in the spotlight again today, all due to its insurance arm, Great Eastern Holdings. Great Eastern posted an 11% drop in net profit for its second quarter, slipping to 248.2 million Singapore dollars. Yet if you look at the first half of this year, the group still eked out a 1% uptick in net profit, up to nearly $594 million. Their earnings per share for the half year nudged up to $1.25 Singapore cents. Some investors might be concerned that Great Eastern shares are still suspended from trading, a move that happened last July after OCBC upped its stake to 93.72%. However, OCBC maintains that its larger holding provides more stable, diversified earnings, and Great Eastern continues to be a robust profit contributor for the banking group. OCBC shares finished Friday at $17.18, down just a hair for the day. As of today, there's anticipation in the air that the resolution to restore Great Eastern's public float is in motion. The company is rolling out a 1-for-1 bonus issue of new shares, which, if all goes as planned, will help resume trading on the exchange. For OCBC shareholders, this is significant because the bank's earnings will now reflect even greater synergetic benefits from its insurance business. Going forward, keep an eye on the insurance segment as a pillar of OCBC's overall performance. Shifting gears to the aviation sector, Singapore Airlines was another headline grabber. The latest AGM saw Chairman Peter Sayah's status change. He's now a non-independent director, a designation triggered by over 9 years of board service. That's an important governance marker under Singapore's corporate guidelines. But the big story for SIA remains its record performance. The airline reported a net profit of 2.8 billion Singapore dollars for the 2025 financial year. That figure was boosted substantially by a unique, one-time gain tied to the merger between India's Vistara, where SIA holds a 49% stake, and Air India. The stock itself edged up, closing at $7.57. More importantly, even with the one-off nature of the gain, SIA's operating numbers show that air travel demand across Asia is not just back, but powering higher. For investors, SCA's earnings show the extraordinary impact of international expansion and smart deal-making, even as the company maintains high occupancy and yields. The question I'm thinking about, can this momentum survive once the exceptional merger-related income is behind us? That's something I'll be tracking in upcoming quarters. Next, let's turn to healthcare. with a spotlight on Raffles Medical Group. This name is well known for being steady and dependable. For the first half of 2025, Raffles Medical posted a net profit of 32.1 million Singapore dollars, up nearly 5% from last year. Revenue increased by 3.5%, reaching just over $378 million. The group reported earnings per share of 1.73 Singapore cents and decided not to declare an interim dividend for now. But that doesn't mean the company is ignoring shareholder returns. Raffles Medical has actually revised its dividend policy, promising to distribute at least half of sustainable earnings and to buy back up to 100 million shares over the next 2 years. The rationale is crystal clear. Keep the balance sheet strong while rewarding investors over the long term. Partnerships with top hospitals in China, namely Shanghai's Renji Hospital and Chongqing's first affiliated hospital, have also started delivering results. These alliances support the group's push for deeper cross-border healthcare expertise and better brand recognition in a high-growth market. The stock itself finished the last session at $1.05, up almost 2% for the day. Here's my take. While the profit growth is defensive rather than spectacular, the company's large cash reserves and prudent cost management make it a classic sleep well at night pick for conservative investors. Rounding out the key movers is AEM Holdings, a technology stock that's been in the spotlight for its leadership changes. Amy Leong, who had been CEO for just over a year, announced her resignation effective this week. She'll stay on as a senior advisor for the transition, while Group President and Chief Technology Officer Samer Kabani takes over as the new CEO. The company said the move was the result of deliberate board-led realignment for future growth. Despite the change at the top, AEM's share price actually rose, reflecting market confidence in Kabani's experience. He's been with the company since 2020 and brings a strong blend of commercial and technical expertise. More broadly, AEM Holdings has been flagged as a likely beneficiary of new funds from the Monetary Authority of Singapore's Equity Market Development Program. With more institutional capital hunting for mid-cap and small-cap opportunities, names like AEM could be poised for a further run, provided they keep delivering innovative products and forging new client relationships in the super competitive semiconductor sector. So, what does all this mean for your investment strategy? Let's tie today's threads together. The SGX remains resilient, even as headline indexes waver from session to session. The Monetary Authority's bold move to inject $5 billion into fund managers, with mandates to drive liquidity and research in mid-caps and small-caps, gives our market a new catalyst. Still, history tells us that sustained returns come from businesses that execute consistently, not just from policy-fueled rallies. Think of today as another reminder of the importance of company fundamentals over quick headlines. My big takeaway today: the pillars of value, a stable banking sector, rising international travel, healthcare resilience, and nimble tech plays remain as strong as ever, but they require discipline and diversification. For retail investors, this is not the time to chase hype. Instead, evaluate your holdings to ensure you're not overexposed to any one sector. Broaden your exposure to include both the big names and selective mid-cap stories with strong management and business models. At the same time, never lose sight of the macro backdrop. Inflation, global trade discussions, and shifting policy environments can pull our market in different directions. And here comes my closing thought. The market is moving fast, and staying ahead requires constant learning and a cool head. If you found this digest helpful, and you want even more real-time analysis and early heads-ups about important SGX trends, consider joining our premium membership. For just $1 a month, less than a kopee, you get my daily analysis delivered before the crowd sees it. It's your personal advantage in a fast-paced market. Don't forget to like this video if you enjoyed the content, share it with fellow Singapore investors, and drop a comment with your take on today's movements.